In 2012, Josh Luber wanted to cop a new pair of kicks, so he opened up his computer and went directly to eBay since, at the time, it had the entire sneaker reseller market back then, but he didn't really like what he saw. See, eBay prices for sneakers were all over the place, and as a sneakerhead with a tech background, he knew that there had to be a better way to cop a pair of kicks. And if you ever hit eBay back in the day looking for something, then you know exactly what I'm talking about right here. It was sloppy and inconsistent, and even on brand new items. But let's go even further back in time too. See, all the way back to 1866. You know, back in the day, if you wanted to put in a purchase of a sale of stock, you're probably gonna have to chase down newsboys for the latest stock prices. Except that information could be very, very old by the time you get it. Because the stock market back then, orders were written down on crumpled pieces of paper, shouted across trading floors, and for retail traders, it was like trading in the dark because information really lagged. Structure and transparency were missing back then. So at that time, Edward Callahan unveiled the ticker technology in 1867, just after the Civil War. It's actually why we call them stock tickers today. And suddenly, up to the minute stock prices became a reality. The information was democratized by this technology. And with that, the stock market became just a touch more fair and much easier to navigate. The market we know today is a direct result of the technology that Callahan introduced back in 1867. And similarly, Josh Luber and Dan Gilbert did the exact same thing with StockX in February of 2016. Today, both the communities, the sneakerheads and the traders, don't have to rely on outdated information. We get real-time data, their structure, transparency, and probably most importantly, authenticity. See, back in the day, fake stock certificates were a huge problem, just like today's Fugazi kicks from China are. And a lot of replicas today are ridiculously good compared to where they were in 2012, but you get the point I'm making here. What Callahan's ticker technology did for traders in the late 1800s, Luber StockX did for us guys in the Jordans and Yeezys. They used tech to level the field for us traders, the great equalizer. But let's hang on one second, because I think the deeper question might go over most people's heads here, which is, why do we even trade in the first place? Beyond sneaker culture and stock trading, people have been buying and selling things for a lot of different reasons over the years. For example, even back in ancient China on the Silk Road trading route, people would literally risk their lives. They'd leave their families behind. They'd risk getting robbed and raided in sketchy mountain terrains. And for what? Was it so they could chase the thrill and the riches? Maybe, right? We see the same exact risk-taking, thrill-seeking thing in modern times too. Darknet traders are buying and selling drugs on sites similar to the OG Silk Road. But here's what I think. I believe that it's actually in our DNA. We're literally hardwired to engage in trading. Maybe some more than others, but whether it's the rush of risking it all on a stock or the thrill of snagging a brand new drop of Jordans, our evolutionary wiring compels us to trade. We're driven by the primal forces of fear, greed, and the need for social acceptance. So it only makes sense that over time, humans build and gather around markets like the modern stock market and StockX community. Because traders naturally, see, we want a system that has more security, more trust, and more fairness. Now, you might be thinking what I was thinking when we decided to make this video. Since human behavior is largely predictable and history does tend to repeat itself, what can we actually learn from StockX and the stock market? What can we learn from their struggles as a company? And what is the secret sauce behind StockX and the stock market? Where are the synergies? Did they really find an untapped market? Or is there something deeper going on here? Something that's intrinsically human? Let's take a look. First off, let's rap about Josh and Dan. Like I said before, these two saw eBay's messy auction world and said, nah, we can do much better. They saw a huge problem. Sneaker shoppers craved consistency in the sneaker game, and that's because just like any stock trader that I've met, nobody wants to get ripped off. No one wants to get taxed on a pair of kicks. No one wants to lose money over bad information in the stock market. And StockX, the unicorn company, solved this problem in a huge way. They became a spot where sneaker prices weren't decided by some guy in a basement on eBay. Instead, it reflected sales data syndicated to their platform. See, StockX really is a platform built by sneakerheads for sneakerheads. So, were they smart or were they just lucky? You know, I'd say they saw a billion-dollar problem and they provided a solution to solve it. But if you think luck is about being smart enough to see the opportunity and being brave enough to grab it, then yeah, these dudes were lucky. And when we look deeper at the StockX model, it's just like the stock market. You've got bids, which is what people are willing to offer for a price. And then you've got the asks, which is what a seller is willing to let you know that they want for that particular good. And then you've got the sweet dance of market moves, market news, and technology connecting the dots in milliseconds. It's pretty cool. And yeah, there's also that surprise factor of it all too. This is where volatility comes in and keeps things exciting. For example, the hype around a fresh easy drop would send prices skyrocketing. Just like an Elon Musk tweet about Dogecoin sent prices to the moon within hours. And you can actually see this on a historical chart of your favorite crypto exchange. And then you can even log into StockX and see examples of this extreme volatility as well. Take, for example, premium percentages. See some brands and specific pairs move up and down more than others. And I'm sure lots of you have spent time chasing those big movers, right? Trying to buy those pair of dunks for $100 and then flip them for $400. But let's not forget that volatility also means there's inherent risk, which isn't a bad thing at all, but this is where we all have to be careful not to get lost in the excitement. Yes, it is exciting, but one big L and you start to remember, it truly is a mix of luck, preparation, and strategy. And what's the most common strategy we see in the stock market and sneaker culture? It's gotta be diversification. Any seasoned trader or portfolio manager will tell you, do not put all your eggs in one basket. And the same wisdom holds true in the sneaker world. Look, sure, those Jordan 4s might look enticing to you and you might love them and think that they might be a good play to buy up as many as possible. But the smart and profitable resellers know not to spend too much money on any one pair of shoes. Because what happens if those 4s plummet in value suddenly? But as much as we can practice good strategy, lots of other things are out of our control too. Because while technology has made things better in the world of stocks and sneakers, it's still far from perfect. StockX does its best to control the marketplace tightly. They try to ensure a level of authenticity. When you buy a pair from StockX, it goes to their authentication site, which is basically like a warehouse where a trained human makes sure the seller isn't passing off a fake and that the buyer isn't becoming a victim to this. And while I personally think that they do a good job of this, it doesn't absolutely guarantee that you're not buying some fake kicks. Then we look at the stock market. There's regulatory bodies like the SEC and FINRA to maintain order. But we all know shady stuff goes on, right, Nancy Pelosi? And even if we're doing our best in trading or operating a multi-billion-dollar company like StockX, perfect control doesn't really exist, especially when we're talking about big lawsuits, which both StockX and the stock market have seen their fair share of. In fact, Nike themselves sued StockX for letting a reseller cop 38 pairs of fake kicks from StockX. Now, if you're a sneakerhead like me, you know what I know. The reseller in the Nike lawsuit, Roy Kim, isn't really the evil villain in the shoe world. So who is the evil villain? Well, if we think of those hedge fund guys that the average Joe retail trader loves to hate on, it's the same deal in the sneaker world. See, sneakerheads who are just mostly buying for themselves hate those automated bot resellers. The ones who automatically buy up every single sneaker draw, then turn around and resell for massive, massive profits. It's that unfair advantage that they have through technology that makes them so hated in the community. And that's the same kind of villain that exists in the markets. In fact, in the book Flash Boys by Michael Lewis, he dives into the controversial world of high-frequency trading, revealing how HFT firms exploit their speed advantage to manipulate prices and profit at the expense of us, the everyday retail trader and investor. So a lot of people think that the markets are rigged due to latency issues, due to algorithms, and more recently, the advancements in AI. But this whole theory was actually debunked by Barlett McCrae in their paper, How Rigged Are the Stock Markets?, where they challenge the notion that retail investors and traders are disadvantaged by high-speed traders. The study adds to the body of evidence that suggests the stock market is not as rigged as some have claimed in the past, at least in the context of latency arbitrage and front running. Now, I don't really know which one is true personally, and I honestly could care less, similar to how I don't care about sneaker scalping. Look, I paid the current market cost of the shoes that I want. I don't lose any sleep over sneaker scalpers or Wall Street whales. I don't even care about the whales in the market unless I'm looking for intel to benefit my trades. I just focus on what I have control over. And why is that? Because I control the one thing that really matters, which is my own mindset. Because lesson number 2 is the mind is your best friend, or it can become a prison. Look, any sneakerhead or pro trader is going to tell you the exact same thing. It's not just about the game, it's really about the mind games that come with it. In both the trading floors and the sneaker stores, the game is 90% mental. Both domains are dopamine factories. They're high-risk, high-reward arenas where the thrill of the chase keeps you coming back for more every single day. The FOMO can be absolutely crippling. Yeah, there's risk too, but it's also the thrill of the hunt. Now, FOMO is the one that smacks people all the time in both worlds. It's the fear of missing out. This is what happens big time, especially when market gains are in our social media feeds all day, Maybe your buddy is flexing big wins, or those new Travis Scott shoes seem to be everywhere except for on your feet. Feeling like you've missed out can drive you to do stupid stuff, like maxing out your mom's credit card for a new sneaker drop. Then there's the one I'm guilty of, which is spending hours and hours browsing for shoes online, and I'll keep looking late into the night just hoping that one maybe speaks to me. And then I do nothing at all and just spend the whole day exhausted while I'm trying to trade and catch up on work. Disclaimer, I do not recommend you doing this. And similarly, traders can get lost in this analysis paralysis too, spending way too much time scrolling Elon's X or Wall Street bets instead of analyzing the markets. And then there's the overconfidence that can really bite you in the ass too. You definitely don't want to be that guy that's getting robbed after flexing way too hard on Instagram. And please don't go run around telling people about your big ass crypto wallet either. And also, when it comes down to the stock market addiction and sneaker addiction, those can look pretty similar too. See, people chase the markets and chase kicks at the expense of their lives and their relationships. I see it happen all the time. And then there's less extreme stuff too, of course, but it's still straight up delusional in my opinion. Think of the idiot on Reddit that just learned about options last week, and now he's selling his dad's car to put all of that money into a 0DT high risk options contract, potentially ruining his life and his dad's financial future. And then picture that guy at the bar who's wearing those like rare Jordan 1 Dior kicks thinking that he's the shit. And honestly, the ladies could care less, and he's not gonna get laid because of it. And straight up, that's just delusional thinking altogether, which is super easy to fall into. And being good at trading in stocks or shoes does give you some solid social credit. Everybody wants to feel admired and looked up to, and more importantly, respected. See, a lot of people try to hide their failures in this world of social media, and that's just not a good place to be living in right now. And while we're dissecting this, let's talk for a minute about the danger of comparing your chapter 1 to someone else's chapter 20. Look, social media is full of people flexing their successes, whether it's their P&L, their sneaker collection, their health, their wealth, or their relationships. But you have to remember this, that success is a curated highlight reel. Maybe they're cooking their books. Maybe those rare kicks are replicas. Maybe they hired their wife for the night. Maybe they're mortgaging their future to keep up with their appearance. And let's talk about artificial scarcity while we're talking about this too. Whether it's that hot new IPO that just dropped or the limited sneakers that just dropped, there is definitely a game being played here on both sides. Now, don't get me wrong, limited releases can sometimes genuinely be about quality and exclusivity, but typically it's a tactic to get you invested emotionally. See, our thought process becomes much less logical the more emotionally invested we are. And let's be honest, in the worlds of both volatile trading worlds, the stocks and sneakers, keeping your cool is an essential key to your success rate. So the next time you find yourself about to dive headfirst into that limited time offer, especially from a stock trading guru, myself included, make sure you're not buying into a lie. I'll never do that to you though. So what's the future got in store for StockX and the stock market? Is blockchain technology from Nike and Adidas gonna, change the way that StockX works, and is it gonna make StockX go obsolete? Are the advancements in 2024 with AI and algorithmic trading actually gonna change how retail traders trade? Or will people just quit trading stocks and shoes altogether? Now look, I seriously doubt that last one is ever going to happen. But if history does tell us anything, it's that both will continue to evolve, driven by technology, psychology, and the eternal human drive to just trade. And if you're in either game, remember this, the thrill is real, but so are the risks. You gotta maintain a level-headed approach. You gotta diversify your portfolio or your sneaker collection and commit to lifelong learning. And perhaps the most crucial of all is knowing to just take a step back and reassess what you're doing. Whether you're investing in Jordans or diving headfirst in the S&P 500, you are participating in a financial ecosystem that's greater than any individual is. And that in itself, that's an extraordinary experience.